Welcome to Markets Now. I'm Michelle Rook with John Payne with Advanced Trading, and we had mostly higher closes except for a few of the hog contracts. And John, let's start off talking about soybeans and soybean meal, which led the rally. Were we putting in weather premium? Was this tied to some of the stories we're hearing out of South America?
I think that's certainly possible. I think there are heavy rains in the southern part of the growing region, which is where they're going to be harvesting those full season beans. Most of the northern guys plant a shorter crop. They'd be out by now. But at this point, the story of South America really hadn't moved the market up till this point. We've been talking about a shorter bean crop for months now, and now we finally kind of see it take off. I will say we need to see the product markets go. Meal made a new low this week, and in reality didn't rally today. So I'd like to see some follow through there. 44 cents is like a 3-year low for soybean oil. But for meal, the nice action through the 100-day. But we need to see the crush go up for the beans to stay high, because if you rally here and meal and oil don't go, you're going to price out the crusher and they're going to stop buying. So at this point, I think, look at where those chart gaps are on beans at 1250. I think that's a suitable target. And just knowing what I know right now about how financing in South America works, I've learned a lot over the last 2 years before I kind of come back stateside and working with folks at Advance, is they are lending a lot of money to Brazilian farmers to sell this crop ahead. And they're taking a lot of leverage on to do it. The worry I have is you get a reason to rally the market, and beans would say short cover on a U.S. crop story. Can the Brazilian farmer afford to hold those hedges? That's the name of the game, in my opinion. And I think, we're talking like much higher prices for that to really get in the pocketbooks of the lenders.
So we did not close beans above the $12 mark, but you think there's enough strong technical signals here to keep funds covering short positions or not?
Yeah, I think we need to see oil move. So the bean oil market needs to get going again. Back in 2022, 2021, we were trading 90-cent bean oil just for a short period of time. But we were trading the 70s for quite a while, and then slowly kind of broke down to the 60s, the 50s, and now we're in the mid to low 40s. Before COVID, that was a 25-cent to 35-cent market. So if you look at grocery store inflation, I think soybean oil has a lot to do with it. And so RFS coming out this week, I'm not an RFS expert, so I don't want to come on here and talk about GREET as if I know everything, but it sounded to me like some folks were disappointed in it in regards to the near-term potential. And at this point, if beans go up without meal and oil going up, you're seeing crush getting negative. And if China's not buying our exports, then who will be buying beans?
So corn market, was it following soybeans and wheat today, or was it putting in weather premium? Are we concerned about planting delays here in the U.S.?
I'm not yet. I'm not saying other folks aren't. I think I think corn is more of an international story right now. The buyers of corn, the Chinese and the Mexicans, really, they're the ones that would buy a lot of our exports, and they're doing well in a standpoint of needing supply. Now, China's buying a lot of Ukrainian supply, and that price is inching higher. So I heard 187 per metric ton today. That's up I think we'll probably call it 60 cents from the beginning of the year when it was trading around 160 a metric ton. So, we're starting to see that corn price find some water level and start to go. And then over here in the U.S., industrial use is great. It's fantastic. And, while we have a lot of consumer problems to a degree on the horizon, the industrial use, there's still a lot of room here for them to buy. Earnings are good. And, in reality, I look at margins for corn, or I'm sorry, for hogs and to a degree chicken, the feeding margins are good. So if corn would even go up another 30, 40 cents, I still think the buyers will be there just based off forward anticipation of making money with the animal.
Yeah. So is corn on the verge of a chart breakout here? I mean, the funds have gotten out of part of their position on the short side, but is this enough to get them to continue to cover those?
Well, I'll talk out of both sides of my mouth. That's what I'm good at. On the bullish side, there's gaps up at 503, above $5. The carries come in here. So that's, those are all friendly things. Could we see planting delays for corn, maybe shed 1 million acres here or there? Sure, absolutely. I think over the longer run, though, your real worry comes with what happens on a rally, how much more supply gets priced in for next year in Brazil. And these are all stories that could, take another 50 cents to develop. But for markets to trade above $5 and stay there, we need to see the global markets start to grow. And we're in a contraction right now. And the U.S. is starting to follow it. So I'm believing that we can break out. I think you look above that 100-day moving average. There's plenty of room up to the 200-day at 480 July, which puts us right at that price gap for the December at 503. But again, I think you look at how this thing is traded over the last couple of years. Like the rips come and then they dissipate, and a lot of times while you're waiting for that green light and why it rallies, so you can kind of figure out what to do. The market will completely take it away. So I'd look at these premiums that are being put in here, KC wheat specifically, as an opportunity. If you've got to sell wheat in the next couple of months to get in line and sell, you got to be willing to be wrong. I'm not certainly thinking the top could be in, but by the time you figure it out, and if all of a sudden the trains get full and they're like, well, the wheat's there, you're looking at a steep carry here for KC wheat all the way out to March of next year. So there's some opportunities here.
So, John, do you think that the weather story is enough of a concern to keep the wheat market moving higher or not?
Well, I would say, just based off the folks, and I just got a call from a guy out in Montana. We're watching weather up there. I mean, the Dakotas and Montana, they could get some rain here, much needed rain, east of Billings, where there's a lot of wheat that hasn't seen much moisture. So I think from what I've heard, the basis is starting to fall a little bit on this rally. The board could go, but I just worry that we're going to price ourselves out of exports very quickly. If you look at where the U.S. is offered versus France and certainly Russia, I mean, we're not going to win any export business here. So if we would happen to lose another 30 million bushels of production, they're going to pull it from somewhere else in the world. But a lot of it depends on those northern rains coming in. It's missed West Kansas the last couple of weeks. And so, we kind of hold our breath here. But this is where marketing opportunities develop. They develop when it's uncertain. If everybody knows it's all good, you don't tend to get a rally unless you have, a COVID-inspired bullish, blow up like we've seen post-COVID.
Cotton market, we have had a huge setback. Do you think we're about done going down, and why has it been such a hard fall?
Well, that's a good question. I think it has a lot to do with just, the U.S. is doing pretty well. There's two economies that I watch that are doing very well. One is the United States, and that's slowly contracting here. We're seeing some PMI contraction. The other one is Mexico. Everything else beside that, especially over in Asia, is really struggling. Europe's starting to struggle a little bit. The consumer is, battening down the hatches, and I think you're seeing merchandisers just have a difficult time moving product right now, so they're backing up and needing to price out future supply. But I do think the farmer in the U.S. is, they're not going to sell down here on the cotton. Now where the insurance levels are. So in my opinion, this is a longer term play for millers overseas. You look at that 2025 contract and maybe even to 2026. This is where you get some sort of economic snapback in those countries. China, they've been very weak the last couple of years, really the last 2-3 years, and they put a lot of money in their economy that could kind of develop a type of inflation story that we've seen. So that's the kind of thing you have to kind of bet on in cotton. I think that it'll develop if the U.S. farmer has a difficult time growing it, and they're just starting to plant. I mean, we're not even really in the heart of the beginning of the season yet. So a lot of time to go, and West Texas is one of those areas that you just can't bet on rain.
And the cattle market had a nice rebound on Thursday with these negative tests for bird flu in ground beef. And we did have a little bit better cash trade in the north. But do you think we can build on this or not?
The seasonals would tell me, yeah. I mean, this is the time of year where I think the animal can perform. I think over the last couple of quarters, we've seen that the market hasn't really cared about what the packer is up against. I really am skeptical that the beef can really trade above 300 for a long period of time. I think just my eyeballs and going out and around town, like seeing folks, like they're starting to shun the high prices that are being offered at some of these quick serve restaurants. And that's really beef. McDonald's earnings this week were one of the worst they've seen in some time. And, that's a harbinger in my opinion for the consumer. And so I think that at this point, that really is more beef than it is the animal. I think the animal has supply side bullish dynamics that has, the fact that the cow calf guy really hasn't expanded too much here. I don't think we've seen a whole lot of heifer retention. So, I think the supply numbers will stay tight. But when it comes to beef, it's like, I mean, I'm not going to pay $20 for a hamburger. I go to McDonald's and I'm paying for 2 kids to go through. It's $15 now around here. So, you're starting to get to levels where it doesn't make a lot of sense. You just eat at home, and and you're still paying $8 for a pound of ground beef. So I think at this point, that's the big worry I have for the cattle sector.
Thanks, John. John Payne with Advanced Trading, and that is Markets Now.